it's a very, it's not something new or a very different story. It's just a very common story of how engineering student goes into trading. But yeah.
Hey Chaitya, welcome to Market Curry. I am Shikhar. And I'm Rahul, and we're so happy to have you. Lovely to have you. I'll just give a brief background for Chaitya. Chaitya has done his bachelor's in chemical engineering and his master's in quant finance from Rutgers, and now is working in the quant space. And we wanted to a deep dive into his career aspirations, his background, and his interests in quant finance. So welcome, Chaitya. And thank you so much for
Hey
doing.
guys, hey guys. It's very nice to meet you, and it's good to be recording this. Yeah. So, like your introduction said, right? I'm currently working in the equity quant space. So that's what my daily job is to. What my daily job is to usually research about algos, how to improve it, how not to make sure that the clients are happy and everything is going well. And apart from that, we usually work very closely with all the people. The tech, the desk, the business, everything. So that gives me the opportunity to communicate with everyone, get to know what people's view are, and yeah, prior to that, I did my masters in quantitative finance from Rutgers, and that is where majorly that's where I was open and I was shown the quant side of it. That is where I learned most of it, and I had a brief experience of being a trader before I came to came from masters. I was a trader back in India. I used to manage my own capital. That was a good experience as well. Not in terms of making money, but it's more in terms of how it builds you and shapes you as a person, and how do you handle that kind of stress, pressure when things are not going your way. So yeah, that's a brief introduction, and yeah, I'm happy to be here.
Nice. So we've seen this is a very common pattern that I have seen in a lot of companies that the cons follow. So they have a lot of students from Rutgers. So what's your take on that? Do you think it's a great school, like it can be compared to the Ivy Leagues, or do you think it's a very good school and it has a very good alumni network?
Yeah, what do you think is special in Rutgers? I mean,
Yeah.
what's attracting all these quants and all these networks to Rutgers?
So Rutgers, I feel has some very good professors. Very honestly,
Hmm.
I mean, even even if it's a subject wherein you don't like and you don't want to go in at all, after that professor teaches you, you might probably want to explore that field. So that's a very one good part. Secondly, they try very very hard, and they've been successful in networking events. At least when I was there, right, every 2 to 3 months they used to have some kind of events, outside and inside. They used to call someone who is a professional on the, either works in a bank or a hedge fund, and then he or she would give a lecture. That way, it just broadens the horizon of the students as to what can be expected, what cannot be expected, how the field is, how the profession is. And there are a lot more inside events wherein you just network with your seniors, you just network with your batchmates. It's not very it's very difficult per se just to network in your class. You're just with a bunch of your friends, with 5 to 10 people. But then these events are something wherein it helps you to network and reach out to and get to know much more people in your batch and your seniors. So yeah, I feel that that's something which Rutgers is very good at, and that's what they have cracked it, and that's what I think it has helped me in becoming what I am and doing my job.
Excellent. I mean, that's great. I mean, we're also trying to figure out the secret sauce to cracking quant jobs especially. But I mean, we still have a couple of months to go, so we're trying our level best. And definitely, we'll be reaching out to you. I'm sure you will give some great guidance. I'm sure we'll get to that in a bit. So let's just talk a bit about. I mean, you did your bachelor's in chemical engineering, and that ended in 2019, and you
Yes,
worked as an investments research intern in 2018 to 2019. So did you
yes.
already know that you want to do this? So why did you do your bachelor's in chemical engineering?
So, I mean, it's nothing new. It's a very typical story. I mean, I selected science after 10th, and chemistry was one subject I mean, I was very strong in it. Now, at that time, I didn't had that knowledge that chemistry is not equal to chemical engineering. But then, I mean, I did a bit of research after my 12th, and I mean, I was like, okay, this makes sense. I mean, there are certain specific field subjects in chemical engineering which was very much into chemistry, you know. So I was like, I can explore that, and I mean, maybe I can, do something in that. So that's why I selected chemical engineering, very honestly. And the second reason was I hated coding. I still hate coding to some extent. So I was like, IT and CS are completely out of my reach. I won't be able to do that. I mean, it could come to a point where I could just drop in one semester. I didn't want to do that. So I was like, okay, let's try my hand in chemical engineering. Went on for 1 year, which is so I did my chemical engineering in Rutgers, and that's a Mumbai university. So all like the first year for the Mumbai University colleges are same for all the batches. So even the CS, chemical engineering, IT students, they all study same. So that is something, I mean, you don't come to know much. I mean, I was just like, okay, I'm just starting off. I had subjects like BWD, which was actually not chemical engineering, but it was more on the electronic side, and some mechanical subjects, which I mean, I just barely passed all those subjects. So after that, I came to my third semester, which was core chemical engineering, and had certain subjects. And then after that, I realized, okay, no, I did select my wrong part. But during this part, I actually, my extended family and if not my family, is very much into markets. So I did have a lot of guidance, and I used to talk a lot about markets, and that's what fascinated me when they used to talk that this stock went up from this to this, and I would ask why was that, and they were like, "There's no news, there's nothing, but it just went up." So I was just fascinated as to why this is happening. If there is no news, if there is nothing going around, why is this stock going up, or why is this stock going down? So I started to research myself. What is it? How is it? Very basic. I mean, I was not so much into investing, but I started off into trading. The first step and the easiest step, if you want to go and if you want to learn trading, is TA, which is technical analysis. So started off doing some research there, saw the charts, tried to read the charts, and that's when I was like, okay, this looks good. I can maybe use this strategy, maybe make some money. Let's try. And during the end of my second year of engineering, that's when I was like, I told my dad, I was like, you know what, let's give me 20,000 rupees, maybe 10,000 rupees if you're not very sure of me, and let me try some hand on this. Let's see where it goes. So he said, okay, I'll give you 10,000 rupees, but not now. Let's do this. Wait, I'll do paper trading for 6 months and see where it goes and where you can, how much confident are you? So did that. Obviously, I mean, nobody loses in paper trading, so made a killing out of it. He's like, okay, let's try now. Did that. I would say there was a beginner's luck when I started off. Made some money, but I mean, not relevant. But it was just something wherein I was happy. I mean, I was like, okay, it works. And then all of a sudden, I was here, and then just dropped down, and I saw that the losses coming in every day, and I mean, that's when I tried to see and think that where am I going wrong? I'm just following the strategy, and I'm just doing whatever I've read and whatever I know, but still I'm losing money. Where is this happening? So that is when I explored trading psychology and the emotions which come into play when you're trading. Got to know more about it, got to know more about the risk management. How do you make sure and how can you automate stuff? How can you make sure that when you know the risk, how much it is and how much percent of that it is of the capital, you're not going to be so scared when you sleep at night. So started to work on that. Post my bachelor's, I was not sure. I gave my CAT as well. Didn't get some. I mean, I was not very good. Didn't get a decent, good marks. I was not getting good colleges, so maybe I was like, I'll just explore trading, and then that's when I made my mind that, you know what, let's do quant finance. And obviously, I mean, I had to come to US because India is still relatively very new when it comes to the quant space. I mean, not in terms of working, but more in terms of teaching. I mean, there are not a lot more courses, nor there are any subjects, specifically, or any colleges which specifically teach quant finance. So I was like, and I was actually going to be going in 2020 fall, but then obviously that got postponed, and I did my trading and everything because of all the code which hit, right? Uh, that is, yes, I was just doing trading for a year, and then I was actually thinking of going in 2021 fall. I was like, I'll just take a drop for 1 year. There is not a point. But then Rutgers opened up an opportunity to, they had the first spring batch because of all this. And then I was actually not going to go to Rutgers. Very honestly, I was going to go to Stony Brook because before that, Jim Simmons, which is who was very famous, and who was the CEO and the founder of Renaissance Capital. I read his book How to Crack Markets, and I was inspired by it. And I was like, okay. And he started off his journey as being, once into defense, and then he was a faculty member and the head and the chair of the Stony Brook. So that's when I was like, okay, Stony Brook is the place. That's when I'll be, I'll get my education. I was happy. I even got into it, but then obviously because of the COVID, I had to defer it. But then Rutgers gave this opportunity, and then I was like, okay, let's try off Rutgers. And I did talk to a couple of people who were like who are my batchmates at like now, but then at that point, just to make sure how is it, and is it worth going in spring and all. So took that leap of faith, went to Rutgers, and then rest all is how it is now. So yeah, I mean, it's a very, I mean, it's not something new or a very different story. It's just a very common story of how engineering student goes into trading. But yeah,
I think engineers are built for trading, quant trading.
I used to think that, but I think I mean, and if you see the data, it actually supports that. But then if I look at the PMs and all the people who actually manages money, and if I just see as to what degree they have done, I mean, obviously they have a lot more experience of 20-25 years, but then if you see how they started, I mean, bachelor's in science or bachelor's in computer science or a bachelor's in arts, that's how they started. Then like slowly they drift to finance, go into the bank, learn something, and then that's how they reach that point. And I feel quant is not something which is very specific to engineering. Yes, engineering students do have a upper hand, but then I mean anybody can crack it, like very honestly. And if but given that if you are actually interested, if you actually you love markets, what you want to do, if that's the case, I think anybody can crack it.
Right. I really wanted to understand how Rutgers teaches all the students, like how the coursework is broken down into. But then I wanted to take a step back, and a lot of people might not know what is hedging. So could you just explain how hedging works and how do you get a good night's sleep every day?
So basically, what hedging is, let's say, I'll give you a simple example. If you are long Apple, thinking that on Friday, thinking that on Monday when the market opens, Apple can go up because Nasdaq is trending very high, and Nasdaq will open higher, and Apple's chart also looks good, and Apple might go up. So you buy, maybe let's say if you're very rich, you buy 100,000 shares of Apple. That's a big quantity in Apple, by the way. Now, but you also want to make sure that, let's say, in the events which are happening right now, right? The geopolitical tension which is going on and everything. You just want to make sure that doesn't come in, and that if that comes in, you want to make sure that your losses are limited. So at that point, what you do is there's something called which you call as options, which you can use it. And what you do, you buy puts. Puts is basically what it gives you is that uh, depending on what strike you take, it basically gives you the opportunity to hedge or make sure that your losses are limited. And how it does is basically it's when you buy a put is you're basically shorting a stock. But then how much do you short the stock is based on the strike of the put. So let's say if you buy and if Apple is trading at $200, right, you buy 100,000 shares. Now if you buy a put at $200, that $200 is called the at the money strike, which has a delta of 0.5. So for every move in the Apple stock, your put will move 0.5 times the move in the stock. So that's how you can hedge yourself and make sure that you don't lose money. And I mean, you'll still lose money, but I mean, you'll be within your risk limits. So yeah, that's what basically hedging is. But I mean, if just in your simple terms, just to make sure that your downside is protected, and that is what hedging is basically. And there are different ways. This one, just simple example I'm giving.
So thanks a lot for that. I mean, what I wanted to ask about was more related on the equity execution space, and I mean, generally, whoever is on Wall Street or working in any company in this role, what do you feel that a day-to-day process or day-to-day work would look like for somebody in the equity execution space?
Right. So my work is usually a mix of couple of things, right? On a very simple day, very easy day, wherein there are no issues, there are nothing, and everything is going as per the day, as per what is expected. My day would be I would have some projects which I have to work on, research on algos, how to prove it. If I want to improve it, then what should be done based on what my stack is? Can this be incorporated, etc., etc. So that is on an easy day. That fully from all the way from I start working around 8:30 till 4:30. That is what I do. I just research and try to find ways to improve the performance. But my other thing is because we are very close with the tech and the desk and the business. If there are some issues on the algo side, right, then and if there is something wherein something goes wrong, and if the desk complains, then what I have to do is basically see what is going on and what can, like, is it something which is going wrong, or is it just the normal market behavior is different, and because of it the algo is behaving different. So that takes up a lot of time, and that takes a lot more priority, because that's something which I mean, those are real orders which are working, and if there's something wrong, and that might cost a desk. So that takes priority and time if that happens. This two things bulkily, I mean, takes 90% of my job, but then the other 10% is basically talking to the tech. Obviously, how let's say if I want to deploy my work and my research into prod or production, what basically, and make sure that the algos use that work and the research which I've done. So talk to the tech. There are a couple of requests which come in, so I have to work on that request as well. But yeah, on a broad level, these are the three segments or categories, wherein I work. So yes.
And what are the parts that you usually improve on, or you basically look at the algorithms? You basically look at the trading algorithms, right? So is it like automating a lot of stuff, or is it making sure that the algos reflect the right market conditions, or what does it include?
So all these algos are pretty much everything is automated. I mean, there's no human intervention. But then each algo has a specific benchmark attached to it. So that benchmark, and then when the order comes in, right, and to use that particular algo, we have the average price of that particular order at which the whole order was executed. Now that price is then compared to the benchmark price. Now, the difference between it is what we call as the slippage. And let's say if there are complaints which are continuously going around, or if there is anything new which we want to add, what our first goal is to make sure that the slippage is minimized. And that is what my work entails. And that is what I do. Basically, I just make sure in any algo which I work on, I just need to make sure that I'm getting an improvement in terms of slippage. I'm getting the improvement in terms of how the order is executed, and then what I try to do is basically then I try to correlate this with how does it make sense. Does the market with like the current market, if I use this strategy, if I use this improvement on the current market, makes sense on the microstructure level and the microstructure of the market. So yeah, that's what I mean. It's already automated, I would say, but then it still requires that improvement. And there's a lot of buzz going around on machine learning, and also we as a team, we obviously their request, and then we work on that as well. So yeah, that's all about how we improve and use our research into algos.
Yep. I mean, I was surprised to hear that you hate coding. So, I mean, I wanted to understand. I mean, I'm sure you're using it day in, day out, every second of the day,
Yeah.
right? So, I mean, for people new to this space, do you have any recommendations? What is firstly object-oriented programming? And I mean, if you use Python, what all libraries do you use? Or if you use some
Right.
other software or a language, what exactly is used?
So I would be the wrong person to answer what is object oriented programming, and I'll tell you why. My coding is till this date, everything is done in something called as QKDB. Now this is a relatively very new language. Not a lot actually. I've never seen any university teach this. It's usually Python, C++, Java, maybe if anybody wants to do that. But then QKDB is something which I use on a daily stuff. But then to give you a broader knowledge on what QKDB is, it's a time series language, very similar in terms of syntax to I would not say very similar, but somewhat similarity to syntax in terms of SQL. But then the speed of processing and how much you can work using this language is, if not 100x of what you can do in SQL.
Wow.
So my major work entails using a lot of time series analysis. So because we use a lot of time series analysis, and QKDB is something which is very powerful in it, I use that. But to your second question on the libraries which you use on Python, I mean obviously the normal NumPy pandas goes without saying. But and then the other libraries depend on what the projects are like. If they are to include machine learning of something of that, or then maybe SciPy, TensorFlow, and so on. But then if there is nothing and we're just doing normal data analysis, and if we're doing data visualization, which is to this date I feel that's the only programming language which can beat Excel. Like I love Python when it comes to data visualization. I like the amount of stuff which you can do is crazy. I might be wrong in terms of I've not explored much more things, but then this is what my view is. Yeah, so that is what I mean. It depends. If I'm using Python for my research, then yes, the libraries depend on what my research is. But then 90% of the time, at least I use Python, or if not, I mean, most of the time it's either Python or Excel for my visualization. So yeah.
That's amazing. I think I've heard of the language that you talked about, but I never looked deeper into it.
Yeah.
Yeah. So, which courses in Rutgers helped you the most, or outside of Rutgers, like any projects that you did?
So when I started trading, right? I started off with simple products like cash, futures, and so on. Not very difficult, not very. I mean, you need to, yes, or if depending on what you are trading. I mean, if you're making markets, that's completely different. But then most of the time when you start off, you are basically predicting the price will go from year to year, or it might go down from year to year. So that's basically your trading momentum, right? So simple products like cash futures are very easy to understand and grab by, I mean, at least theoretically, when it comes to all this stuff. What I love was, I used to love was options and the non-linear product and the non-linearity of it. I used to love that. And I used to always just read about options. Where is it? What is it? How does it move? What does the Greeks do? How does it help? How can I predict? And so on. So during my trading, I did a lot more, research and study about options. That's what my favorite course during my master was. That is the stochastic calculus, which entails all this stuff. And and the professor in that course was amazing. There is not one bit I would like to change in that course. Amazing professor, amazing way of teaching, and excellent course. So that was one thing. I was also, I explored time series analysis. I was pretty good at it. I used to love it, as well as the way they taught it. So explored a bit of that, and in the end, what I realized was that in anything which you do, time series is always going to be one thing which you always use, and because you're going to be researching on days of data, if not, if you're doing it in intraday, then maybe milliseconds and seconds, but it's still the time series which you're using. So yeah, time series helped me a lot. On the coding front, to be very honest, I learned the entire QKDB on my work and while I was working. So that's something I was never, I did not explore it while I was in my master's. I did have heard of it, and I just saw a couple of videos, but then I learned and I started working with it in my work. So yeah.
So no projects as such that any specific projects that you would want to share that might be useful now, or maybe they were in your time as well, not relevant now.
So I would say, in terms of projects, if you want, if you're comparing that to my work, no, I didn't do anything in my projects which was very much related to works. But then if you really, ask just about the projects which might be helpful, might be something which is very practical. The one thing about projects which I realized is very different to what you do when you do it in real life is the calibration. And how let's say the constants and the slopes and what values do you use it is very different when you do it in projects, because you have a fixed set of data, right? Now when you work in real life, what you'll realize is most of your models or algos or whatever you work on is on a global level, depending on how big the firm is. When you do that, it's close to 100 markets you're going to be accessing. So calibrating that model such that it works at least in, if not every region by region or market, is something which is very difficult and which is very important as well. So that's something which I would suggest, that if you're working something, do something which is very close to being which you can do it in practical. Like the practical knowledge of it is something which is very different, and if you incorporate that in your projects, like say if you're doing a project on on options models, right? You using, let's say, the Heston model or something of that sort, which is one of, if not a bit complicated, then how will you calibrate all the constants and all the parameters of the Heston models? We can, like, if you research about this, they'll find multiple papers, but they'll never say to you how did they calibrate that model. Yeah. That is something which they like, that is the secret sauce, and that is something which I feel is very important. And secondly, if really into, depending, obviously I was much more interested into trading and quant models, and also I usually did my projects into all that. So even hedging stuff, what are good ways to hedge? Is dynamic hedging a good? Is discretionary hedging good? Can you build on parameters? Let's say if the price of a stock moves by X%, only then the hedging will be done XYZ. Just random examples, but all this, there's a lot of stuff out there which is, which you can use. So yeah, I mean, I guess keep your projects as much practical as possible, and then that is something which helps down a lot.
Thanks for that. I mean, I just have one last question, which is like a closure. I mean, I'm not sure if Rahul has some more. We can just wrap it up. That's the case. So, I mean, what is your advice to aspiring quants in this space right now? I mean, we'll just close it with that.
So I would say, obviously, knowledge of the quant space. Be very sure what you want to do, right? I mean, if you're doing, and if you want to go into quant dev, be sure what quant dev does. And if you're going into a quant research or something of quant trading, do make sure you know what exactly a quant researcher or a quant trading does, because all three of them are very different. Be very sure of what you want to do. Have good knowledge of it. Obviously, that goes without saying, and that is something I guess you will obviously have before you prepare. I mean, the way you prepare for your interviews and the way you give your interviews will obviously reflect that. One thing which I would like to really, exaggerate and say it is, be very good at communicating. Wherever you are, whichever job it is, your soft skills should be really good. I mean, that is something which I learned in my job, and I'm still learning. I'm not the best at it, but that is something which, no matter, like, I've seen people, I know people, who are really good at communicating. Maybe they're not, or maybe they are good at their work, but then the communicating is something which is very important, because whatever you research, whatever you do, that needs, like, that goes down or up the level, and that needs to be communicated, and that needs to be reflected, and that's reflected in that way. So communication is one of the most important, if not, I would rate that higher to that of knowledge. I mean, your knowledge can come as and when you work, but communication is something which you need really work upon. Make sure you're good at it, and just ask questions to whoever and wherever. I mean, if you think you don't know the answer to this, ask questions, don't be shy. So yeah, I mean, that's it. I mean, I feel this three stuff, together, if you do it, and just believe in yourself. I know the job market is very tough, and it's sometimes it's very frustrating, not having something of that sort, but then eventually I feel everyone gets it, and yeah, I mean, that's what I believed in, and I am thankful enough. So yeah.
One last question. What's your take on networking and the location preferences? Like, does networking help a lot, or has this trend changed that back when you were applying, networking didn't help a lot? Not a lot of people were doing it, but now it has picked up a lot. The second thing is, does New York help you a lot in getting really good jobs or in a con job?
So to answer your first question, 110% networking helps. What I have seen is people randomly just message everybody, like hundreds of messages. That is not networking. That is something which you're just doing. I would not suggest that, because one, it is very irritating on the receiving end, because this is something which you're not going to be able to help, but then you still receive it, and then you have to, at least anybody who is very, decent enough will acknowledge it. Okay, okay, but I'm not the right person for this. So first, like I said, once you know where you want to go, the second part of the thing will be networking with the people who are working where you want to go. And that is very important, that if you want to go into quant research, there are multiple aspects into quant research. What quant research, what asset class? See, that is something which is very deep, and that's not something which at this point I feel any fresher would be able to analyze. But I feel if you know quant research, then at least segregate it by depending on where you are, how you are, what kind of job can you get, and then network with people who are actually doing that job, not with everybody and anybody. That is something which is very important. So yeah, networking 100% helps. During my time, you'll not believe it. So I had 2 offers, and one of them was purely due to networking. And that was the whole story of it goes as, I just message, and I did the mistake which I'm telling you not to do. I used to randomly message everybody. Now that one random guy was sitting on a bank, and I just randomly messaged him, this is something which I'm looking for. XYZ, and if you can help me, that would be great. He's like, I'm not into quant, but I know a person who works at some other firm who is into quant, and I'm like, okay, give me his or her number, and then I would be happy to connect. He connected me with him, and that is how he helped me get an interview set up, everything, and then I landed a job. So it does help. That was I feel that was me just being lucky at that point. But I would still suggest don't randomly message anybody. Make sure you know who the person is before you message.
Right.
And when you message him, the way you message is also very important. Just hi, can you help me refer? No, introduce yourself, how what you're doing, what you're looking for, and then maybe you can ask for help. But that is how it helps on the receiving end as well. Because if you just say can you just refer me? They have some kind of image in the firm they're working as well. And if you just randomly just refer anybody and everybody, that's not how it works, and that's not how people take it. So yeah, networking 100% helps. It was there during my time. It has picked up a lot in the last 4 years. That's one thing. New York, on the quant side, I would say definitely the hub, 110%. But quant research, if not, can be done from anywhere. And I've seen people and firms who have their offices in California, in South Carolina, in Miami. You have big firms now shifting to Miami side. So obviously Miami is again a good place. But 110%. Not to forget Boston. All the buy sides are there. So, and it's a big hub. Very honestly, Boston is a big hub. It's a home to State Street. So that tells you everything. So yeah, but I wouldn't say New York is a notch apart and a notch above everything, 100%. And it does help to, it does not help to be in New York while searching for a job, but it does definitely help to work in New York. It's okay if you do your masters in Boston, California, and everywhere, if you want, but then if you get a job in New York, you have a lot more. The way you can connect to people and everything, it changes. It opens up a lot of more ideas for you.
Right. Well, excellent. Thanks a lot for that, Chaitya. I think we'll wrap it up with that. And really appreciate your time. It was really, I'm sure
it was good chatting with you all.
Yeah.
Thanks.
So yeah.
It was great having you. Thank you so much. You broke the coursework, the projects, and your own experience, and then the con part. So I think it was great.
Very
wholesome.
wholesome.
Thank you guys. Yes. Hopefully we connect soon.
Perfect.